Ladies and gentlemen, welcome to the Palantir earnings live stream. Sorry, I just saw someone said Navitas is tomorrow, bro. That is correct. We have Pinterest today instead. I'll get them on that. Can you replace Navitas with pins in the thumbnail? Perfect. Okay. Now, we have Palantir earnings tonight or after the close, along with their call at 5. So should be a fun day going through Palantir earnings and seeing some of the numbers. I cannot wait, ladies and gentlemen. Duolingo, Pinterest. We've got what else? Grab, On Running, but mainly Palantir. And that's going to be a fun one. Okay. Nebius doesn't care for the war. Where are we at now? Oh, my. 178.92. Oh, my gosh. We just hit 179. Are we going to break 180 today? I won't be able to roll out. I just rolled my covered calls on Nebius to 175 for June 18th. I'm getting buried, but that should be a lot of fun. We are going to have Palantir earnings here in the next 12 minutes or so. That should be a lot of fun. The stock currently is at 146, up 1.6%. So there could be potential for them to run on earnings because they have been a little bit depressed, sold off with IGV and the rest of the software names that have gotten hit since Anthropic has shown off some pretty interesting models. But yeah, I'm still looking at Nebius here and seeing if we get to 180 today. Oh my. Now, to be fair, I gotta get drop the logo. Just the word. Okay, he's already updated it. He's the frickin' man. Okay. I'll get the Navitas thing fixed. I thought that was today. That could have been my bad. Circle up 20%. Oh my. Long way from being at an all-time high. All-time high 298. I think that was right whenever they were first IPOing. Yeah. Whenever they first IPO'd, they skyrocketed and then eventually collapsed down to nearly less than $40 or $50 a share. Now starting to recover and having some pretty big days recently. Perfect. Okay. Thank you, Marshall. Okay, so let's see what the expectation is for Palantir. We have for expectations tonight $1.54 billion in revenue, EPS 27 cents. If it's anything like last time, this is not going to be what they actually end up printing. I'll show you guys what they did last time for earnings. It's been a surprise across the board almost ever since the end of 2022. That was whenever Palantir was not doing so hot. But you can see by these green dots here, expectation of 3 cents, then they end up putting out 4. Expectations of 21 cents, they end up putting out 25 cents. Expectations of 15 cents, 21 cents. Really big beats recently, and same thing on earnings as well. You can see that revenue surprise in recent quarters, 4.6%, 8%, 7%, 2.5%. Those are really big surprises. EPS even bigger, 19%, 40%, 33%, 27%, 11%, 12%. That is very, very good. Now, the stock, mixed reaction after earnings. Some days, if you look here, I'll just make sure it's really, really big. and then go across. We're looking at post earnings. So last quarter, the stock was up almost 7% after earnings. The quarter before that, it was down 8%. Before that, up 8. Before that, up or down 12. And then back in 2024, we've had some unbelievable runs. Look at this. This is insane. 21%, 23%, 20, 30, 10, 24, 24%. That's just great. So hopefully, for the Palantir investors' sakes, that we end up seeing an unbelievable move after hours. That would be a lot of fun. I'm not betting on it. Like I've got no money going into earnings or going into the close here on Palantir. Not a shareholder, but I'm a listener, a potential investor. What also would be interesting if you know they put up really, really good earnings and then the stock just didn't like one piece of the information. Like maybe it was you know, an Iran deal or something like this. We've seen this a couple times where there's like one statistic that the market just overly hates. If that happens on Palantir, we end up getting down to like $120 or something crazy like this. I could be open to purchasing Palantir tomorrow morning if we end up seeing an overblown sell-off. But I need to see that sell-off. I don't think that's what's going to happen because the growth rate on Palantir has been so significant. And if we end up going to Fiscal AI really quick, we can see that that growth has been really strong and likely to continue based on guidance. So let me show you what this looks like. Currently, this is the past couple quarters from Palantir. And if I put on revenue growth rate, we did 70% year over year last quarter. The quarter before that, 63%. The quarter before that, 48%, 39%, 36%. So they're accelerating growth while the number is getting bigger and bigger and bigger. That's an amazing statistic for this company. Now, if we also end up seeing going into next quarter, the one that we're just about to see today, the expectation is for 74% growth. This is what's expected to continue to happen. Okay, Wall Street's now expecting $1.54 billion. Well, what if they end up coming out and end up putting in 75, 78, 80% growth rates? That is really, really going to be interesting from Wall Street. Okay, or for the markets, for investors. Wall Street's going to have to look at that and say, hey, when does the growth slow down? Or are we just going to start doubling the company here soon? And can they keep that up? Because right now it's not easy for a company, since June of 2023, whenever growth bottomed out. And I mean, really, that's when it bottomed out. If you scroll back, growth actually decelerated down to 12% and then re-accelerated up to what is expecting to be 74% this quarter. Duolingo, this is going to be another one. I cannot wait for Duolingo earnings. I'm not a shareholder. I'm a listener. I'm a learner. But that is what we are going to be trying to pay attention to. Is growth going to reaccelerate back to that 40+% range, or are they decelerating in earnings? The problem with DLocal is they had recently said that they were not focused on monetization. They were focused on user growth, right? User growth should translate to revenues. And, maybe it's not profitable or they're not worried about margin in the short term and you're worried about like taking market share. But if you're not even seeing that market share, like MEU's taking a dip and sort of holding stagnant for a bit, then that growth is potentially gone. We look at the year over year growth rates on monthly active users. Look at this. That does not look good. You went from 49% at the peak in June, climbing all the way down to 14%. If that decelerates once again this quarter, it's not going to be good for Duolingo investors. All right. I said D-Local. Sorry, guys. I'm a shareholder of D-Local, and so my bad. I get those names confused sometimes, but I promise you I do not get their business models confused. Duolingo, translation, D-Local, payments. My bad. Palantir, couple red candles before earnings showing off here in the next 5 minutes. Duolingo down ever so slightly, $111 per share. That should be quite interesting. We'll take a look at their 1-year returns. Wow, Duolingo 1-year return on the stock down 77%. If we are implying a 15% move on Duolingo, I sure hope it's to the upside. Because that's not even 15%. Like, that doesn't make us back 15%. That's 15% of where we are today. So it's like a tiny increase. You know? That's unfortunate. 77% down. You essentially have to 5x your stock to get back to where we were. Well, or 4x, I guess. Okay, let's see what else we have. We have Grab. We have On. Oh, it's not On Run. Dude, I don't know why I thought it was On Running. It's On Semi. On Semiconductor, that one should be really interesting. Vertex as well. Vertex Pharmaceutical. What else do we have? We have Paramount. That might be interesting. What else do we have? Sterling Construction, Vimeo. I don't know if you guys care about these, do you? Vimeo for Voyager Technologies. That might be an interesting one. Let's just see what Vimeo says. Not even up here. What? Is the ticker wrong? VMEO. That's what it says it is. Fabrinet, yeah. Okay. Awesome. Awesome. So we'll watch these into the close. 2 minutes away. Fireflies today as well. Oh, yeah. Firefly. Pins. Did I not put pins? No, I got pins right here. Okay. Let me know if I'm missing any. Sonos. I don't think anyone cares, but we'll see. $1.8 billion company. Grab and Duolingo, we have that. All right. Let's do this. Okay, 1 minute left till earnings. Let's see how the stocks are reacting so far. Dude, Nebius. Wow. 176 potentially to close out the day. We almost hit $180. Who's in Nebius, by the way? You know, Palantir up 1.4%. Potentially recovering a little bit from that recent sell-off. We ended up getting to 149 at the end of the day. Fabrinet up 1.6%, Sonos 0.1%, Firefly Aerospace down 1%, Voyager Technologies down 3.7%. And Pinterest, what, did we get leaked earnings or something? It's running into the close up 3%. Look at the volume on that too. People are getting pretty excited about Pinterest. We did see some great advertising dollars from Reddit, from Google, from Meta. Maybe Pinterest is the name. You know? Okay. The market is now closed, and now we are going to go check on earnings. Nothing's running too much just yet. Maybe on semi, up ever so slightly. Let's see. Where's Palantir? This is the most exciting one for me. Let me know in the chat if you guys see earnings or if I miss anything. Trump just said he's looking forward to see China's Xi. It'll be a very important trip. Palantir up 0.4, Duolingo up 0.6. I think this is just pure jitters. Except the only one that looks potentially real is Pinterest down 2. But even that, I don't see any numbers out just yet. We will see. Wow, Duolingo. Uh-oh. Up 11, almost 12%. So if you guys wanted to see if it was a 15% move, it's looking likely, and it's looking to the upside. Duolingo sees second quarter bookings 283 million. The estimate was 288 million. Well, that has not hit the stock just yet because the stock is up. Let's see. Duo's up. I don't have the numbers just yet. Anything else moving? Anything else? Vertex Pharmaceutical up 2.3. No, it's all about Duolingo right now, and I don't have their numbers. Duolingo sees second quarter adjusted EBITDA 71 million. The estimate was 67 million. I don't know if these numbers are correct, but that's likely. If it was a double beat, that definitely could be likely. Okay. If I don't see a report on these numbers soon, I'll have to go hunting for it. But Duolingo's giving up all of that growth. Honestly, I think that this person, 123 Matt, might have the exact numbers because I think it might be giving up a little bit of that growth based on the bookings number. Because I was a little surprised whenever we saw it was up, 12% while missing on bookings. That didn't make much sense to me. Up 6% now, still very good for Duolingo investors. We'll get back to that. But I'm not seeing any numbers. I'm going to have to go track them down. And make sure I get Palantir's as well. Also, when does Palantir usually put out their numbers? Up now 0.6%. Palantir usually gives out their numbers at 4:05. 4:05. So we got about a minute or so for Palantir's numbers before they actually come out. Yeah. Okay. Duolingo, wow, giving up all that gain, only up 3% now. And I still don't see their press release for 2026. Oh, yes, I do. Yes, I do. All right. Daily active users grew 21% year over year. That's a reacceleration. Revenue is up 27% year over year on Duolingo, now up 2%. Palantir's coming out in 20 seconds, so I got to hurry up. Total bookings up only 14% year over year. Net income was 43.5 million with a 14.9% margin. That's worse year over year. Margin had gone down. Margin on adjusted EBITDA, though, went slightly up. Duolingo is now in the negatives. Oh my gosh. Big sell-off now. Palantir is up. Palantir is up. 405 came out right on the dot. Let's go hunting for these numbers. Congratulations. are most likely in order. I see Duolingo's numbers just came out. They beat on EPS by 16%, beat on revenue by 1%. Palantir just shifted to red. We are now in the negatives on break even. The market doesn't know where to place Palantir. Let's go hunting for the numbers on their numbers are not out yet on their investor relations page. But I'm going to check to see if some of the Bloomberg reporters will put out the numbers first. Paramount Studios up 5%. Sonos up 2.4%. Duolingo only up 2%. And Palantir back green up 2%. We've got an earnings here. Palantir's Q1 adjusted EBITDA was $990 million. The estimate was $886 million. Where are you getting these numbers from? You got a little Bloomberg terminal? Pinterest with the huge double beat. Huge double beat on Pinterest. They beat on EPS by 23%. They beat on revenue by 4%. Stock is up 7.6%. On semiconductor did a double beat as well. I'm seeing here beat on EPS by 3%. EPS is up 16% year over year. Revenue is only up 5% year over year, but still beat expectations by 2%. Palantir, going back to Palantir, EPS beat by 18%. They got 33 cents of EPS versus 28 cents expected, and revenue did 1.6 billion versus 1.5 billion expected, beat by 6%. EPS, oh my God. EPS beat by 154%, or not beat, but it went up 154% year over year, and revenue is up 85% year over year. Wall Street wanted 74%. They got 85%. Oh my. That is crazy. Oh, wow. Okay. That's mind-blowing, dude. $1.6 billion. I can't wait to see how that shakes out. They wanted 1.54 billion. They got 1.63. Wow. Beat by like $90 million. They beat on EPS by 18%, but it's up 154. 1.6 billion and $350 billion market cap. Yeah, but it's growing at 85% and accelerating. It's still accelerating. So, if this growth continues to, doubling or even more than doubling year over year, how do you know that that's like not worth it? Here, this is the actual report. Palantir, Rule of 40 has soared to 145%. Like, come on. That's insane. We have shattered the metric. They're more than 100% higher than the Rule of 40. This is the highest I probably have ever seen, other than, I think, maybe one time. Like, I'd have to see NVIDIA's, but NVIDIA is close to that. A feat matched only by other fellow AI infrastructure companies, NVIDIA, Micron, and SK. Okay, there you go. Momentum surges. We grew 85% last quarter, our highest ever year-over-year growth rate by more than doubling our U.S. business, and now we are raising our full-year revenue guidance by 71% growth, 10 points ahead of our guidance from last quarter, driven by our confidence in our accelerating U.S. market, said Alex Karp. U.S. revenue grew 104%, 19% quarter over quarter. 19. Most companies can't do that in a year. They did that in a quarter of the time. U.S. commercial grew 133%, and U.S. government grew by 84%. U.S. commercial grew 133%. Stock is down right now. That's like this is the type of stuff that makes me want to buy the company. I said if it fell and it was on some BS metric, I will buy in. Like if this somehow gets down to like 130 tomorrow, you have to buy this name. Like, all right. Closed total contract value, $2.4 billion, up 61% year over year. Closed 206 deals of at least $1 million, 72 deals of at least $5 million, 47 deals of at least 10. Wow, that's a lot. 47 deals this quarter of 10 million or more. Adjusted EPS of 33 cents. Wow, stock's starting to fall down 1.4%. Duolingo is down 9%. Duolingo went up 12% and then down, and now it's down 10%. Oh my gosh. Outlook. Next quarter, they're expecting 1.8 billion. They're going to beat that number as well. Adjusted income from operations between 1.06 and 1.07, roughly, let's say. Full year 2026, we're raising our guidance. We're raising U.S. commercial guidance to in excess of $3.2 billion, representing a growth rate of at least 120%, at least. This is just crazy. Here, let me just make sure that this is fine. Okay. I don't know if I do want to read this entire letter, but Alex Karp just saying that he's N of 1. We believe it not hyperbolic to say that we are nearly all AI workflow. Sorry, this is why I didn't want to read it. I suck at reading. We believe it's not hyperbolic to say that nearly all AI workflows that actually create value, especially on the battlefield, are built on Palantir. We are an N of 1. Our financial results now demonstrate a level of strength that dwarfs the performance of essentially every software company in history at this scale. Oh my God. We generated $1.6 billion in revenue in the first quarter of this year, a new record in company history, representing a soaring 85% growth rate over the same period the year before. Put differently, we almost doubled the size of our entire business, of all of our revenues generated across the government and commercial sectors in the span of only 12 months. The significance and enormity of this accomplishment, the magnitude of this feat against non-insignificant headwinds must be lost on some. Sorry, may be lost on some. So I can't read. Duolingo's down 11%. Palantir is almost flat, but still down 0.5. We stand on the walls, sentinels of the inner sanctum, against the assault of AI slop. The ontology is based firmly in reality. There is here a dialect between ground truth, tribal knowledge, and enhancements. This is why I don't like reading Alex Karp. It like, for real, the way he talks bugs me. But I'll go back and look at the numbers because I get numbers. We live in the heart of ground truth and the sanctity of the sentinels and what? Look at micro. Oh my gosh! Look at they have this rule of 40 on their. You reading anything is cringe, dude. I really, it's not my strength. I like the numbers. I can see numbers. I honestly, I'm just too ADHD that I just read ahead and then I just confuse myself. I can read in my head fine, but I read ahead in my head and then I'm trying to say it out loud and then I'm reading slower than I read in my own head. I'm just not good at reading out loud. Okay, Micron and SK Hynix is at 265% rule of 40. That's nuts. Revenue grew 85% year over year and 16% quarter over quarter to 1.6 billion. Adjusted free cash flow of 925 million, 57% margin. A 57% adjusted free cash flow margin. Adjusted operating income was 60%. Yeah, they don't really have CapEx. Unreal. Of course, you can put up free cash flow, 57% margin. Remaining deal value grew 112% year over year and up 12% quarter over quarter. And total contract value is up 45% year over year. Overall TCV grew 61% year over year. Now I'm all self-conscious. And look at the stock. Look at the stock. Doing nothing. I get that a lot of growth is priced in, but like, what do you want? 85% year over year is insane. And once again, like, they are proving they literally are putting up some of the best quarters like you've ever seen in history. Load-bearing institutions need load-bearing infrastructure. The Palantir ontology is at the core of infrastructure powering human agent operations at scale by uniting data, logic, actions, and security in real time. Where it matters most, AI slop is not an option. I mean, that's true. It's so funny how much like into the, regular speak AI slop has become. Maven Smart System, decision advantage for the warfighter. I care about one thing and one thing only. That the 18, 19, 20-year-old kid who has no choice in where he went or what threat he was facing, I want him to win and come home. That's why we do it. Palantir is very helpful in delivering this. Wow. Palantir is proud to expand its partnership with Airbus. Yeah, it's going to be a huge customer. They have been for a long time, I'm pretty sure. Like a very long time. Years and years and years. The impact was staggering. In 2025, we output 26% more engines to our commercial and military customers than we did the year prior, said GE Aerospace. And SAP said early results from these engagements show more than 99% validation accuracy within just 2 weeks and more than 70% timeline and cost reduction for the migration. At DevCon 5, do I see a mitten here? No. At DevCon 5, we put new products and capabilities in the hands of builders. An AI for deployed engineer, MindKit, and ontology foundations build product-ready agents with voice integrations, what-if scenario modelings, and granular security controls. Yeah, Palantir and NVIDIA unite for sovereign AI OS. We could stand up these platforms in any air-gapped region, completely on-prem, completely on-site, completely in the field. AI could be deployed literally everywhere, said Jensen Wong. Pinterest is up 18% now. Fabrinet is down 14%. Wow, Pinterest. I said it could be interesting. A lot of the advertising names have done very, very well. Let's go have a look at some of Pinterest's commentary for the quarter. Revenue beat, up 18% year over year. They were expecting $965 million. They got $1 billion. EPS was expected at 23 cents. They got 27 cents. Global monthly active users is up 11% year over year. Adjusted EBITDA is up 20% year over year with a 20% margin. Guidance also came in much higher than expected at 1.1 billion versus 1.13 versus 1.12 in terms of revenue. Global average revenue per active user went up 6% year over year in global ARPU. US and Canada ARPU is up 9%, and Europe ARPU is up 17% year over year. Rest of world is up 38%. Okay. They completed $2 billion of buybacks during Q1. And the CEO said, we delivered a strong start to 2026 with Q1 revenue surpassing $1 billion, up 18% year over year. And global monthly active users growing to 631 million, our 10th consecutive quarter of double-digit user growth. 10th consecutive quarter of double-digit user growth. Wow. Pinterest is where online discovery leads to real-world action, and we're seeing continued momentum driven by our differentiated visual search product experience. As we continued building an AI-powered ads platform that delivered performance for advertisers, we remain focused on ensuring monetization more fully reflects the strength of our engagement. Wow. Big win for Pinterest investors here. Palantir still dead flat, but the actual earnings call could be a big difference. Alex Karp has been known to move the market with a lot of his conversations, with a lot of his speeches. What time for Grab earnings? Let's see. They're probably a little bit different. Grab comes out at 5:05. So we'll actually get the numbers, or at least that's when the expected time comes out for numbers, is after we're live with Palantir. Which sucks. But okay. That is the Grab numbers. Let's go ahead and see if Fiscal AI has the numbers now updated for March. They do. Okay, let's have a look. Let's have a look. Look at that, though. Look at that. That's starting to look like a parabolic takeoff. And the reason why is it's not the same amount of growth. Even if you were able to hold up like a 40% growth rate, that's beautiful. But they were growing at 40% for only one quarter. They went from 39% to 62%. Then they were only in the 60s for a little bit, then 70, and then we were only in the 70s for a little bit. Now we're growing at 85%. That's insanity. If we look back all the way since the company has been, a public company, we've never grown this fast. So congratulations to the people that believed in Palantir. Back in March of 2019, they were doing $146 million. They've now 10x that. 10x. What time's the Palantir call? 5 o'clock. Grab is at 5:05. We probably won't see it till after the call. After the Palantir call. Okay. But that's just the revenue, right? If that was standing alone, that would be one thing. But the fact that look at this. Gross profit and margin. Margin is now at the highest it's ever been at, and look at their gross profit. Look at that. It's even faster than revenue is their profitability. Like, that's unbelievable. You look at net income here, consolidated net income, and we'll also, like, that's one thing. Let's get it a lot closer. We don't need to see that much. They did almost $900 million. That's like this quarter plus this quarter plus this quarter plus this, like all of these quarters combined up until the most recent ones, all put together. And the stock is up 1.2%. Now starting to go a little bit green, which, like, good. Let's also see the margin here. We will go see margin. And so whenever people also point out their PE ratio, like the PE ratio is like 230 times, I'll show you guys what this means over time. So we'll look at net profit margin as well. Net profit margin, it has just skyrocketed. But a trailing PE is looking at the last 12 months. So before, you were looking at a company that was doing about $1.6 billion of earnings per year. Okay. But after this quarter, you're now doing $2.3 billion of net income per year. If I said revenue, I apologize. This is net income. So 1.6 to 2.3 quarter over quarter from a last 12-month perspective. Okay. Whenever you're doing this type of growth, next quarter, like the PE ratio falls dramatically every time. Every time you're seeing that PE get cut down a ton. So while 230 times is very, very high, what happens if in short order they end up doubling their net income? Like, remember, these are not years, these are quarters. So year over year, from March to this year, they've gone from $580 million in net income to $2.3 billion in trailing 12-month net income. A quarter from now, that PE ratio is going to fall even more, a lot more. A year from now, it's probably going to be, 1/3 of what it is. And so that 230 times PE, if the stock stays flat, you're essentially saying, okay, well, it'll be like, who knows, 80. 80 is easy to pay for a company that's, tripling and making higher and higher margins and tripling in their growth. Like, look at these margin statistics. These are some of the best quarters I've ever seen of any company. Okay. But hey, who am I? Let's also see free cash flow. Come on, guys. You replaced a 1.3. Look at this. I'm not going to add any fluff. I'm looking at last 12 months. So this is essentially looking at the quarter and the past 3 quarters before that, all added up into one. So you can see how this has affected the company overall. Back in March, it used to be $1.3 billion in free cash flow. This quarter, in the last 12 months, they've done $2.6 billion in the last, so you've doubled. And then if you were to go back the year before, they doubled. If you were to go back the year before, they doubled. They went from 300 to 600 to 1.3 billion to 2.6 billion. What? That's actually crazy. Even boring Amazon had a PE of 200 once. Yeah. Let's see maybe free cash flow margin. There we go. There you go. Look at that. And that's 51% last 12 months. Let's change it to quarterly. 54%. So they've actually been printing higher numbers than that recently, but it's been held down by some quarters. Already priced in, my friend, and I love Palantir. I mean, it depends. Was it priced in, how do you say it's priced in? Priced in at 147, $146 is fair value? And what was the value whenever it was at 207? Was that overvalued? And what was it whenever it was at $100? Was that undervalued? The whole idea of it's already priced in is some of the dumbest shit that people say online. It's so dumb because this stock price is so volatile. What has happened during this time? It's the same guy that says it's priced in here and it's priced in here, but these are two different prices, drastically different prices. So the whole idea of it's already priced in is exactly, it's just people saying this is you don't know how to price it. I get it's an expensive company, 230 times. But then say it's overvalued. If you think it's overvalued, that's fair. But if a company stays flat after those earnings and after growing and beating, by the way, beating on growth, the expectation was 75%. Some people were hoping for 80%. They saw 85%. It is growing faster than people can comprehend. It's true. A lot of these AI names are. Um, Tanner getting mad at chat is priced in. It's just like what people say constantly whenever, like, they try to act, say something in hindsight. Because if during this call, the stock starts to go up and people start to like what they hear and the stock goes to 155, then was that priced in? Like, it, tomorrow this stock could be leagues above where it is today. People say priced into Nebius all the time, and then it has a freaking up 14% day. Was it priced in? Like, but anyway, Pinterest up 17.7%. Let's see. Dude, let's check the total outstanding shares on Palantir. What has happened there? Did they go down? No, they slightly went up. Okay, so they haven't. I'm sure they are doing potentially buybacks. Repurchase of common shares. Did they not do any repurchase of common shares this quarter? Or did we just not get the numbers yet? No, it looks like they didn't buy any more any shares this quarter. I wonder why that is. Maybe it's priced in. Let's see issuance of new net issuance. So this is looking at the amount that they added, but also subtracting the amount that they bought back. But it's still so low, even though they didn't buy back any shares. So what happened to stock-based compensation? Or do they do share-based compensation? Share-based comp. $201 million of share-based comp. Yeah, I guess that makes sense. Let's also look at SB. Why is that comp to revenue? Yeah, that's the funny thing, right? Although their stock-based compensation is going up, it's actually falling off a cliff as a percentage of revenue. We were doing like 20 plus percentages. Now we're doing 12.3%. 12.3% stock-based compensation as a percentage of revenue is so low for Palantir. That's actually really low. This used to be like going back, this used to be so high. I remember this. We were doing like 30 percentages in stock-based compensation as a percent of revenue. And, Wall Street used to tear their heart out because of it. 12.5% is so doable for a company growing 85% year over year. Like 144 rule of 40. Is Duolingo going to zero? I don't think they're going to zero. But they are getting their butt kicked in after hours right now, down 15%. Not looking good. $93 a share right now. You can see. 93.70 is the latest update that I see on the minute chart. Down 15%. Switch this to quarterly. So growth is falling off a cliff, but the growth actually came in better than expected on EPS and revenue. But I'm pretty sure their bookings, if we can find their total bookings here, paid subscribers still went up 21% year over year. Subscription bookings, or actually, I think it was total bookings. Total bookings is now only growing by 13%. What a growth story that I just absolutely dried up. You were growing bookings by 37, 38, 37, 40%, then 33, then 24, then 13.5. Wow. Okay, let's go back to Palantir because we didn't even get into their segment level growth. Oh, not custom metrics here. We'll look at their revenue, but this is actually how their revenue should be broken down. Commercial versus government. Both growing. Both growing. Those are stacking S curves, but the real growth is commercial. Look at this growth rate. 95%. 95. Okay. Let's see what else. Oh my gosh. Dude, I love, while I'm working, Marshall is just creating me a new website right now, and he's sending me screenshots of what it looks like, what he's vibe coding, ChatGPT 5.5. It's unbelievable. It's so good. STRL did a massive beat. Sterling infrastructure up 20%. Wow. Sterling infrastructure. Is this part of the AI build out? I don't follow this name. Crazy. Palantir now up 1%. Oh, you guys didn't see my screen. Sorry about that. Sterling infrastructure is up 20%. That's what it looked like. Engineering and construction, but is it for engineering and construction for like data centers? Are they making clean rooms or what? Why such an unbelievable beat? Yes, data centers. Cool. Very, very cool. Okay. Let's see. Total customer count. Look at that. Wow, past 1,000 customers. 1,000 customers now for Palantir. That is phenomenal. Growth rate up 31%. Total commercial customers up 33%. Total US customer count is up 42%. Billing percent change. Oh my gosh, 93%, another new all-time high on growth rate. Like, that's crazy good. Long-term remaining performance obligation is now growing at 170%. Here, let's stack those. This is what I like to do sometimes. And then we'll do this. So we can kind of stack these and then look at the growth for both. Long-term is growing like gangbusters. Well, short-term is still growing. Overall growth climbed 134% year over year. They're going to continue to accelerate their growth rate. That's what's going to happen here. Wow. Firefly is up 7.7%. Fabrinet is down 10%. Sonos is up 6%. Sterling infrastructure is up 18.7%. Pinterest is up 17%. Duolingo is down 14%. That's been such a loser for so many quarters. And Palantir up 0.7. Would I buy at these prices? I mean, I don't know. Like, if I want to buy a really expensive, high growth name, I probably still would lean to like Nvidia or something like that right now. I want Palantir. Like, I just want it in the portfolio. But I also feel so greedy. Like, I think that software just gets irrationally sold off every time that a model upgrade happens. And that makes me want to think like I can get a price at like 120 or less. Maybe I don't, but I almost feel greedy with these types of names. Okay. You think I can? Okay. Any news for grab numbers? Grab numbers come out at 5:05 according to my report. So it's not going to come out till Alex Karp is live. But I'll try to plug in some numbers, or if someone else is putting numbers on screen, like 123 Matt in chat. Also, Matt, if you're still here, man, I will mod you 100%. I appreciate you posting legitimate numbers in chat. That's very helpful. Never saw Tanner so excited about Palantir. I was this excited last quarter. You cannot deny. I'm not going to sit here and deny their dominant quarters just because I'm not a shareholder. The thing that pushed me out of Palantir was, one, I didn't understand their moat, and they were, very expensive. And I think for every company that has reward, you also have potential downside. And for me, I was like looking at the company. I'm like, okay, well, where do you go from 300 billion? Where do you go from 400 billion? Where do you go from 500 billion? Like now, okay, to double, you need this to be $1 trillion company. And I know that the company's been around for like 19 years or whatever, or 18 and a half years, but still, that's a long time where a lot of their growth has been very, very recent. And I just don't know if those types of companies deserve $1 trillion valuations. But I'm looking for companies to double. Yeah, I can, exactly. I can debate the valuation, but I'm not going to, debate the quality of the company. This is a quality company. But how much do you pay for that? I don't know. Well, whenever I think people say it's priced in, I think, like, to me, that does not mean that people are saying it's overvalued. You can say that a company is overvalued. I think that that's fair. Okay. I think whenever people, but the stock's not falling either. Okay. So they definitely greatly beat on earnings. To me, what priced in means is like, oh, this is what the expectation was 85%. Like this is fair value. This is how much they expected. That's how much they got. And this is how much the, like SanDisk. Oh, priced. That's what people said literally whenever I was listening to SanDisk earnings the other day, like Thursday night. You said, oh, it's priced in, the stock fell to $1,000. 2 days later, it's 25% higher. It's $1,200 and something dollars. Like, what was it priced in? It's 20% higher now. A trading day and a half later. And we're at $1.25 thousand. But whenever you look back to, whenever they showed off earnings here, they fell from 1,100 down to less than 1,000. I'm like, that is not. Wait for analysts upgrade and suddenly not priced in anymore. Unlike options, there should be time upgrades. Every day that passes and Palantir continues to grow, the price should go up. Now, because sometimes it's overvalued, there's macro worries, there's, a lot of things that shift. Like, you don't always just see companies go up, but like if things were priced to perfection, they would slowly go up over time. But understanding Palantir's valuation is really hard because they are an N of 1. Their valuation's an N of 1. Their company growth is an N of 1. Their margins, their total addressable market, it's very, very hard to understand. But it's fine with you saying it's expensive. Maybe I just don't understand what priced in means or the way that people use it these days. But if you think it's overvalued, say that. If you think it's undervalued, say that. But don't say like, oh, they beat on growth rates by 10%, but the market expected that. What? Then say that, revenue came in at 85%, not 75%. That's what beating revenue means. Okay. What is the rule of 40? It was 144%, something like that. Do I have it here or 145? Here, wait, let me take off everything else that was here. Rule of 40, 145%. That's disgusting. that is so crazy. Unreal. Not related, but how do you feel about Citigroup's continued bullish stance on SoFi? I have not seen their report. What did Citigroup say about SoFi? I saw that Andrew Jeffrey emailed me and he said that they are super bullish still. And Devin Ryan emailed me and he said that their price target was still 30. What is a rule of 40? I'm a noob. It's the combined total. So some metrics are different. For Palantir's, it's adjusted EBITDA margin and total revenue % growth put together. So you're adding a combination of growth metrics while also like a value metric, like how profitable they are. And you put that together, and why they call it a rule of 40 is that a solid company would be somewhere between 40%. So either you're growing at 30% at a 10% margin, that's good, or you're growing at 20% with a 20% margin, that's great. If you're growing at 10% with a 30% margin, that's also good. And so the rule of 40 kind of flattens out that growth versus value to kind of get a combined score. There's free cash flow rule of 40s. There's adjusted EBITDA rule of 40s. Obviously, it depends on what you use. But for Palantir, the rule of 40 is actually a rule of 145, which is clearly much better. That means they're growing, like their growth rate, 85%, is more than double the rule of 40. That's crazy. That's insane. Where's Duolingo for comparison? I'm not sure, brother. So it all depends because the metrics are a little bit different for companies. Yeah, I don't see one here, but that could be because their adjusted numbers are not out. So we don't see their adjusted EBITDA. No, we do right here. I'd have to see. Adjusted EBITDA margin was 25%. Oh, no. Sorry. That's their guidance. We need to pull this back. I don't have their adjusted numbers yet. That's what's happening. That's why I can't see it. But hopefully I will soon. But their revenue, for example, is 26%. So that they probably are above 40. But yeah. Okay, let's take a look at some stocks. And then we have earnings in 12 minutes, it looks like. Firefly Aerospace. Take a look at that quarter, up 10%. Sterling Infrastructure up 19%. Sonos up 4.3%. Fabrinet down 9.7%. Voyager Technologies flat on the day. Paramount Skydance is up 2.8%. Vertex Pharmaceutical down 0.5%. Pinterest up 15.7%. On Semiconductor down 5%. Grab is flat. They have not shown off their numbers, and so those numbers are just bouncing between 2 points. Duolingo down 13.8%. We're now sitting at $95 a share. Wow. And Palantir up 0.6. Wow. Circle's even running in the after hours. Sorry, I just need to check. What is Bitcoin at? Just under 80,000. Ethereum just above 2350. Yeah, I think it's it said on my report thing, it says 505. So if I do get the numbers, I'll post them in chat whenever we're listening to the Palantir call. Because Nate's in chat, Nebius, brother. Do you still have covered calls out? Are you drowning or are you enjoying your time? Because I've got some calls that I think I'll be fine on, but yeah. It's always good picking a great winner and backing it a ton. You know, it can change your life. I have 175s for this Friday. Well, good luck to you, man. Seriously. But worst comes to worst, like I had 160s freaking for May 15th, which now I have 175s for June 18th. I'm just getting but eventually we're going to have a big sell-off. Like the volatility of this name is too strong for me to think that this is just going to endlessly run. I can't imagine it. Yeah, and you can just keep rolling out. Like I can't roll out that far, but I'll get a credit for. I'll probably get into the 200s. If this thing just skyrockets into the 300s, I might start to really lose my shirt. But yeah, we'll see. I thought about that with Palantir, but it ran away from. Yeah, but Palantir is an N of 1. There's actually a lot of GPU rental companies. You know, there's Amazon, Google Cloud. Amazon's going to be, Meta's going to be setting up their own data centers. You've got Azure, you've got IREN, you've got CoreWeave, you've got like so many of these names. You've got a shoe company that it sold off their shoe part of the business to get into GPU rental space. Like maybe it does just take off. That would sadden me. But it's not going to be the worst thing that's ever happened. Might be okay. All right. Let's see. You pump for earnings next week? I have to be up at like 4 a.m. because I'll be in the West Coast. Yeah. I'm super excited, brother. I can't wait. The Palantir calls in 6 minutes and 30 seconds. Palantir is in 6 minutes and 30 seconds. I've got the call up, ready to go. And let's see what else was in the presentation. We went through a lot of it, but not all of it. Let's see what else. Yeah, that rule of 40 is scary good. From 60% to 150, or sorry, 145%. It'll probably be 150 next quarter. U.S. commercial, U.S. government growing very well. Let's see. 16% quarter over quarter. You know, back in my day, companies that grew at 16% were great companies. Google is growing at like 16% year over year. I think they're growing at like 18% right now, but like still, that's like a good quarter for them year or a year for them, 16% growth. They did that in 3 months. Different valuation, of course. Very different valuation. We ended Q1 with $8 billion in cash equivalents in U.S. treasuries, and no debt. I did not know that. Why didn't you buy back any stock? Four minutes, 45 seconds on the call. Okay. What time does grab report? It looks like to be 5:05. Back in my day. Yeah, well, I mean, you're right. I'm 28, but I've been investing for 10 years now. So, you know, I'm doing my best. Why buy back shares at that PE? I mean, if you want other people to pay for it, you should be willing to pay for it. You know, if you don't say that your company is cheap, why would I buy it? So I think that they, probably should buy enough to alleviate any amount of stock-based compensation. I think that's probably healthy, especially whenever you have $8 billion in cash. But why take on any dilution? Like, have the shares going down. It's so much better to have your shares even ever so slightly, even if it's freaking one share down a quarter. At least there's no dilution that analysts factor into their modeling. No one factors in dilution for Apple or Google, or it's actually quite the opposite. They actually factor in reducing shares over time, a bonus on EPS. Analysts give you a nice juicy bonus there. But whenever you're dilutive, then they dilute you in the modeling. Okay, stock earnings call is in 2 minutes and 30 seconds. Trimming Nebula standard? No. No, I mean, I might be forced to because of my covered calls, but no, I'm not trying to sell. I'm trying to stay in the above water. But also, I wouldn't I wouldn't have it any other way. Trump signed an executive order that defense contractors cannot buy back stock. What? Is that true? So what? They just have to dilute endlessly? How does that make any sense? So wait, they give stock-based compensation and can never buy it back? Dylan, that doesn't even make any sense, bro. Yeah, that can't be true. That doesn't make any sense. Okay, the call is about to start. It isn't entirely true. Well, maybe they can only, maybe they're only allowed to buy back the amount that they give compensation out for or something like this, but that is crazy. Less than 1 minute, yeah. I've got this up right here. I'm just making sure that there's no music or anything like this. Plus, a lot of it is just, hey, stand on, wait for analysts to dial in and yada, yada, yada. So we're not going to miss a single second. Just wait on me. They know it's overvalued. That's why they aren't buying back stock. Maybe, but what else are you doing with $8 billion? They don't seem to acquire a lot of businesses. I think they have in the past. They have acquired companies, but it's definitely not often. If they're not buying back,
We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our second quarter and fiscal 2026 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
The last 3 months have been some of the most exciting in the history of Palantir, as we've watched the whole world begin to see the incredible promise of operational AI, as well as the risks and perils of being beholden to models alone. We achieved 85% year-over-year revenue growth, our highest overall revenue growth rate as a public company, and 16% sequential growth. Our U.S. business, now 79% of total revenue, surpassed 100% year-over-year growth for the first time since our DPO, growing 104% year-over-year and 19% sequentially. Our Rule of 40 score climbed to 145, up from 127 last quarter on absolute AIP dominance. AIP is the only platform that establishes a true AI no-slop zone, a necessary requisite to converting potential AI leverage into compounding real-world value without risking enterprise disaster. As the AIG CEO noted in their recent earnings call, they are deploying AIP to implement a multi-agentic underwriting and claims solution comprised of purpose-built agents ingesting submissions, evaluating risk, benchmarking pricing, and detecting fraud, all coordinated through the ontology. When you want AI to work in production, in a real enterprise, at real scale, where there's no room for slop, there's only one platform, AIP. It is not just the playbook of cutting costs and streamlining processes. AIP is the battle-tested platform that allows the wholesale redefinition of how companies compete within their industries. The depth of our customer commitments reflects that ambition. Referencing our work with Motor and Freedom Mortgage, where we are revamping the end-to-end mortgage process with AIP, the Motor chairman stated, quote, "This strategic partnership will reshape the future of our industry. Together, we're building technology that can help improve affordability, lower borrowing costs, and expand access to homeownership for millions of Americans." Our U.S. commercial business grew a
Hello?
testament to the compounding real value created for our customers. For example, on the back of a 26% increase in engine production with AIP, GE Aerospace deepened their partnership with Palantir last quarter to deploy agentic AI-powered solutions across their production system and military aviation supply chain, with a shared mission of ensuring that more aircraft remain available to train America's next generation of U.S. Air Force pilots. Ondas and Worldview expanded their work with Palantir to bring AIP to the stratosphere and build the operational backbone required to scale their missions. They noted, quote, "Palantir-powered workflows don't just make one launch faster, they make dozens or 100 simultaneous launches possible with the same operational efficiency." Load-bearing institutions upon which the West depends know or will soon know that our AI platforms are the indispensable means of delivering their must-win operations.
This guy's actually running out of tokens.
An upshot of our transformational work across every domain. The foundation remains our deployment of Maven Smart System to empower our troops. As the Chief Digital and AI Officer at the Department of War noted, quote, "I care about one thing and one thing only, that the 18, 19, 20-year-old kid who had no choice in where he went or what threat he was facing, I want him to win and come home. That's why we do it. Palantir is very helpful in delivering this." Beyond Maven, ShipOS, in partnership with the Department of the Navy, has produced remarkable impact at several manufacturing industrial-based suppliers already, including dropping manufacturing bill of materials approval time from 200 hours to 15 seconds, increasing speed of contract review cycles by 57 to 73%, and reducing monthly material planning time by 94%. Just as commercial organizations are reshaping their industries, ShipOS is the reinvention of America's maritime industrial base. This is just the start of how our support of manufacturing processes will transform existential programs for the U.S. government. In fact, we've already seen the government step in to transition and scale a successful private sector manufacturing program we're supporting. On the civil side, the USDA awarded Palantir a contract of up to $300 million last month to provide USDA with capabilities to support American farmers, secure farmland, enhance supply chain resilience, and shield agricultural programs from fraud, abuse, and foreign adversary influence. In government and commercial, Palantir is transforming how load-bearing institutions operate and how they win. I'll now turn it over to Shyam.
Thanks, Ryan. For over 2 years now, we've been saying that while LLMs are improving, models are converging, and the cost per token continues to drop precipitously. GPT-4 equivalent performance that cost $20 per million tokens in early 2023 is now approximately 1,000 times cheaper 3 years later. Because of this increased efficiency, use case demand for tokens is exploding. Our AIP workflows today utilize vastly more tokens, agents orchestrating across the ontology, chaining reasoning, tool use, retrieval, and execution, and it's growing. This is Jevons paradox. It's the single most important dynamic in enterprise software right now. When the Victorians built more efficient steam engines, everyone assumed coal consumption would fall. Instead, it skyrocketed. Cheaper transport meant more demand for transport. Tokens are the new coal. AIP is the train. As inference gets cheaper, the number of tasks that you can economically assign to AI grows exponentially. Precisely because tokens are so much cheaper, agent flows, call tools, self-correct. But in practice, the number of tasks that you can trust a model without the right harness exponentially declines. More tokens means more slop. And the more commodity cognition you consume, the more you need a system that can prevent the economic harm so you can harness the economic value. That system is AIP. That intermediary representation is the ontology. This is also why we are seeing the death of legacy software. AIP replaces static workflows not by replicating the playbook, but by eliminating the need for one. Thomas Cavanaugh Construction, 97% of their employees use Foundry every day, and every other piece of software must now justify its existence. And so far, they haven't been able to. We're seeing this internally too. This quarter, we replaced our old expensive CRM with an AI-first solution built on AIP in a few months that users absolutely love. Our customers are seeing the real value is not automating what you already do, it's doing what was previously impossible. A major telco set out to automate 10 million customer calls a year. The real insight was that the most dissatisfied customers never call. They churn silently. The reframe was counterintuitive. Don't use AI to reduce calls. Use it to generate them. An AI advocate that proactively calls on every customer's behalf. The point is simple. Use AI to do more work that was never economically feasible before AIP. For every agent action, our customers need to answer 3 questions. Who authorized this? What did it cost? Can I trust what it did? These questions need exact answers with precision. There's no tolerance for slop. We're building a platform-native agent engine SDK, a single set of primitives for building, persisting, governing, and operating ontology-native agents. a common layer that lets you visualize every agent in your enterprise and control it, regardless of how it was built. A true agent operating system. On top of that, unified cost attribution per agent, per session, per workflow, with administrative caps. Full provenance, so every ontology mutation traces back to the agent and reasoning chain that produced it. Security marking propagation from input data through agent sessions onto all output with approval gates for any workflow that could reclassify information. That's how you get a CISO, a CFO, and a combat commander to say yes. AIP is the no slop zone, the platform where every agent action is governed, attributed, and auditable. Turning to US government, on the foxhole side, Maven met its moment across real-world events in Q1. Usage has doubled in the past 4 months through the end of March and is now 4x over the past 12 months. Across the services, the combatant commands, the joint staff, and the intelligence community. When the stakes are highest, when failure is measured in lives and readiness, this is where we are uniquely positioned. On the factory floor side, the demand on the defense industrial base to ramp production and sustainment has been so acute that we have surged resources from our commercial business. This is exactly what Warp Speed was built for, modernized American manufacturing. And we're doing just that where it counts the most. AIP is the default builder platform in the Department of War, with thousands of developers using AIFD, migrating legacy systems, standing up new capabilities, solving problems that used to require contractor teams and months of lead time. Our software is becoming the most malleable and responsive weapon system for the Joint Force. Finally, what's now clear is that Mythos and Spud, and even other current generation models with AIP, are capable of finding novel vulnerabilities in complex cyber kill chains. They have discovered thousands of 0 days in major operating systems and browsers. This is the Spudnik moment in the AI arms race. The rate of vulnerability identification is about to skyrocket. Finding the bugs is no longer the limiting factor. Rapid fire remediation with exact precision, immediacy, and absolute certainty is the new hard problem. Knowing exactly what versions of what software are running where and closing the remediation chain autonomously. Apollo was built for exactly this. We're shipping the next generation of Apollo as we help our customers reposture for this world. And note the Jevons paradox dynamic here too. More AI means more code. More code means more slop. More slop means more attack surface. More attack surface means more vulnerabilities. And more vulnerabilities means more Apollo. I'll turn it over to Dave.
Thanks, Sean. We had an outstanding first quarter, delivering our strongest ever Q1 sequential growth rate of 16% and our highest ever reported year-over-year growth rate of 85%. Our revenue growth rate accelerated for the 11th consecutive quarter, highlighting the durability of the growth of our business at scale. We expanded our Rule of 40 score by 18 points quarter over quarter from 127 in Q4 to 145 in Q1. Our U.S. business achieved triple-digit growth for the first time, driven by accelerating demand for our AI platform. Revenue in our U.S. business grew 104% year over year and 19% sequentially in the first quarter. Our U.S. commercial business grew 133% year over year and 18% sequentially, and our U.S. government business grew 84% year over year and 21% sequentially. On the back of this continued strength in the U.S., we are raising our full year 2026 revenue guidance midpoint to $7.656 billion, representing 71% growth year over year, a 10-point increase over our full year 2026 revenue guidance from last quarter, and our largest ever full year revenue guidance raise. Turning to our global top line results. First quarter revenue grew 85% year over year and 16% sequentially to $1.633 billion. First quarter U.S. revenue grew 104% year over year and 19% sequentially to $1.282 billion. Customer count grew 31% year over year and 6% sequentially to 1,007 customers. Revenue from our largest customers continues to expand. First quarter trailing 12-month revenue from our top 20 customers increased 55% year over year to $108 million per customer. Now moving to our commercial segment. First quarter commercial revenue grew 95% year over year and 14% sequentially to $774 million. We closed $1.3 billion in commercial TCV bookings in the first quarter, representing 42% growth year over year. Our AI platform dominates the U.S. markets as the only real choice for deploying AI models operationally in a way that actually works. First quarter U.S. commercial revenue grew 133% year over year and 18% sequentially to $595 million. This exceptional growth even understates our U.S. commercial momentum. As Ryan noted, we had a successful U.S. commercial customer program transition to a U.S. government customer. Absent this transition, U.S. commercial growth would have been 143% year over year and 22% sequentially. In Q1, we closed our third consecutive quarter of over $1 billion in U.S. commercial TCV bookings at $1.2 billion, representing growth of 45% year over year. Over the past 12 months, we closed $4.7 billion of U.S. commercial TCV bookings, a 115% increase from the prior 12 months, highlighting the accelerating demand for AI that creates real operational value. Total remaining deal value in our U.S. commercial business grew 112% year over year and 12% sequentially. Our U.S. commercial customer count grew to 615 customers, reflecting growth of 42% year over year and 8% sequentially. First quarter international commercial revenue grew 26% year over year and 5% sequentially to $179 million. Revenue from strategic commercial contracts was $3 million for the quarter, representing 0.2% of overall revenue. We expect revenue from these contracts to be less than $500,000 in each remaining quarter of this year. Shifting to our government segment. First quarter government revenue grew 76% year over year and 18% sequentially to $858 million. First quarter U.S. government revenue grew 84% year over year and 21% sequentially to $687 million. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for our AI platform in government. First quarter international government revenue grew 51% year over year and 7% sequentially to $172 million. We closed $2.4 billion of TCV bookings, up 61% year over year. On a dollar-weighted duration basis, TCV bookings grew 135% year over year. Net dollar retention was 150%, an increase of 1,100 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q1 of last year as load-bearing institutions continue to turn to Palantir's battle-tested AI platform. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the first quarter with $11.8 billion in total remaining deal value, an increase of 98% year over year and 6% sequentially, and $4.5 billion in remaining performance obligations, an increase of 134% year over year and 9% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 88% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $984 million in the quarter, representing an adjusted operating margin of 60%. Q1 adjusted expense was $649 million, up 7% sequentially and 32% year over year, primarily driven by the continued investment in our AI platform and technical hiring. We continue to expect expenses to ramp in 2026 as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. GAAP net income was $871 million, representing a 53% margin. First quarter stock-based compensation expense was $202 million, and equity-related employer payroll tax expense was $28 million. First quarter GAAP earnings per share was 34 cents. First quarter adjusted earnings per share was 33 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 145% in the first quarter, an 18-point increase to our Rule of 40 score from the prior quarter, and our 11th consecutive quarter of an expanding Rule of 40 score. With our 2026 revenue and adjusted operating income guidance, we are guiding to a Rule of 40 score of 129% for the full year. Turning to our cash flow. In the first quarter, we generated $899 million in cash from operations and $925 million in adjusted free cash flow, representing margins of 55% and 57%, respectively. We ended the quarter with $8 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q2 2026, we expect revenue of between 1.797 and 1.801 billion, and adjusted income from operations of between 1.063 and 1.067 billion. For full year 2026, we are raising our revenue guidance to between 7.650 and 7.662 billion. We are raising our U.S. commercial revenue guidance to an excess of 3.224 billion, representing a growth rate of at least 120%. We are raising our adjusted income from operations guidance to between 4.440 and 4.452 billion. We are raising our adjusted free cash flow guidance to between 4.2 and 4.4 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Well, welcome to yet another exciting earnings call. With these numbers, the ones that leap out to everyone are the over 100% growth in the U.S., the rule of 145, the 85% growth in the U.S., and guiding to 71%. And just the underlying dynamics of that, you would think that the most interesting thing is just the truly N of one nature of these numbers. And in fact, it is pretty fascinating, especially people who've doubted that we get this far. But I think the most important thing about our earnings is it establishes beyond a doubt that while over the history of Palantir, we focused on things that actually transform the world. And the current environment is actually being transformed by the Palantir platform. And although there's a wide view out there in the world that AI slop is going to take over the world, our clients, especially
Like that's not me, that's them.
everlasting primordial infrastructure industries, know this is not the case. They buy our product despite the fact we have 70 salespeople. A normal company of our size would have 7,000. Only 7 of our salespeople actually even really sell. We are doing what a normal company would do with 7,000 salespeople with 7 people. We're doubling the U.S. We are dominating on the battlefield. Shyam will talk about this later, but the way
I don't know.
opposed and in contradistinction to both allies and friends and enemies is being done in our platform from beginning to end across the U.S. The reality that we will be able to drive 100% growth in the U.S. is being driven by the fact that our customers either know or will know that you need actual results. Those results require granularity, specificity, actual relationship to facts. The appearance of software working is not software working. And the slop that is getting a lot of attention is not only dangerous in terms of the hyperbolic rhetoric that it also, like, there will be no jobs because of the slop, that nothing will work. We will have a godlike figure in the name of AI, when in fact, what actually does work is a platform built by a motley crew of highly technical people who over 20 years have been maligned for being right about the nature of having to build Foundry, the nature of having to build Apollo, the nature of an FDE, and
This is a joke.
and the demand
Oh, there you
The
go.
demand for this is once in a lifetime. And that demand is actually driving these financials, meaning growing.
It didn't change. Oh no.
71% goal for the year. What did we miss? Okay. Any case, I hope you guys got that.
Secrets.
Wow, this is like being on stage. Yes. So with that, maybe we'll go to questions. But the unique way in which this company is being run the unique way in which the way we built the products, the unique way in which we're willing to be non-mimetic. When the whole world said software had to be worthless, we built platforms that worked. When the whole world said you could not extend it with FDEs, we went and built FDEs. When the whole world is saying AI slop without an ontology that allows you to put true statements and truths into the ontology and therefore produce actual results, we stuck to our guns. And what did we get? We got these results. And I think if you just look at the results, how can a company grow 100% in the US with functionally a non-existent sales force with the same number of people? Our free cash flow this quarter is larger than our revenue a year ago in the same quarter. Think about that. Same company, same people, extenuated products, it's all being extended. And then look at the impact on the battlefield in the Middle East, on every government institution, on demand of our product, and in US commercial. This is all the result of being right about product, right about execution, and standing in the headwinds of people who are certain they're right. Now the new version is AI slop, and proving that they're wrong with our results. This is an incredible quarter, and I'm very proud of this.
We received a question from Aiden G, who asks, how does Palantir expect to navigate an environment where AI is pressuring software companies and their capabilities?
Well, thanks, Aiden, for the question. Well, it's a massive tailwind for us because we've always been counter-positioned against this sort of legacy thin software, that kind of was built by and execute a playbook that's built around rent extraction and no outcome delivery. We, on the other hand, have been focused entirely on building software that's focused on alpha, not beta. We're not trying to make you the same as every other person. We're trying to figure out what makes you different. How do we express your business strategy through the software platforms and products we build? So that part is probably obvious, that counter-positioning. But the other counter-positioning is against AI slop. We are focused on enterprise autonomy, not on dazzling demos. We have in the ontology the no slop zone. The ontology is the body to the AI brains. You can't actually interact with the enterprise or affect the world. Your agents can go nowhere without ontology. And you're seeing that with our customers. In government, we are the platform that you build applications and agents on. In the commercial world, people are replacing legacy software at a lightning fast pace, as I mentioned in my remarks. And we see that even internally at Palantir, where we've gotten rid of legacy software like CRM, built it very quickly on top of our platform to a user experience that our users love.
Almost every single highlighted example of AI that actually is producing results in the US is actually Palantired by Palantir. And one of the ways to pen test what we're saying is just dig into the examples of AI actually transforming an enterprise. Call the client, talk to them. I'm not saying every single one is, but almost every single one is. And it is because the theory of how you do AI and the practice in the enterprise are just radically different. And they look the same to non-technical people, but they do not look the same to practitioners, whether you're on the battlefield or whether you're an insurance company or whether you're a hospital or whether you're a manufacturer. What they discover is the reality of doing this requires a platform like Ontology and currently executed on top of Foundry with FDEs. And currently that combination is available from one company, and that is us.
Thank you.
Please.
Our next question is from Dan with Wedbush. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Yeah, thank you. Well, great quarter yet again. My question is, how do you balance between going after government deals and then commercial deals? Because obviously, you're in a unique position, just like we saw with that deal this quarter. Can you talk about that balance? Because obviously there's more demand than supply in terms of relative, in terms of Palantir. Thanks.
Maybe we'll talk to Ryan. So the reality of how Palantir works is we position and prioritize the U.S. warfighters over everything else. And when we believe or know because of our proximity that the U.S. warfighter is in danger, we put the whole company against it. And it is not always the way in which one should do this, but it is how we do it. And we've done this from the beginning and we're doing it now. And so in the current context, we take opportunities that look the same from a business perspective. And we 100% prioritize this nation's security over any other variable. Now, that also interestingly gives us leverage, because we go to the government and one thing people don't believe is we're like, look, this doesn't work the way you think, or this kind of execution will not lead to success. And you are actually asking us to take money out of our pocket to do it, which we will do. But we cannot sign up to do something that won't work, that will not advance the warfighter, that will not advance munitions, that will not help this country have better unit economics, while just hurting or deprioritizing another client. By the way, we tell commercial clients this. I tell commercial clients this all the time. We are highly monogamous in our in the way we work. We are not trying to make you into a commodity. The only thing we will put above you is the U.S. national security. And by the way, we're more than willing to do this when it is unpopular or when it's popular. And that's, if you look at the retention and the full alignment inside Palantir, the benefit of this is we just attract and retain people that understand there's a higher value than just running the business as a business. That said, our biggest problem currently is demand in the U.S. I believe we will have 100% growth in the U.S. Is that we just cannot meet demand. And again, the advantage here is we can go to commercial and government clients and say, look, this doesn't make sense. If you want slop, you can go here. If you want old school software that actually doesn't work and probably will disappear, there are a lot of names. If you want us, we need to do it in a way that will make sense. And that gives us a lot of leverage. But we're very upfront with people. We're just like with our customers and just like we are internally. And we're also doing this abroad. You know, one of the reasons why we're intolerant of software and AI or some kind of witchcraft dance that you have in some parts of continental Europe is we have no time for it. We literally have no time or no energy for the waste of time machine. Probably I should be on TV explaining to people why the models are actually only useful on a platform, why the use cases platform companies are talking about are actually in Palantir, why the cost and token reduction in token price is exactly what we predicted, why our clients actually are asking, can I have a cheaper model, since they seem pretty similar, but we also don't have a lot of time for that. Would you like to add to this now that we're on the mic?
I'll just say what we're seeing across our customers, and this is what's driving the U.S. generally, is those that understand the load-bearing context. In order to apply AI in that context, you need to be able to deploy it with precision, without slop. And you see like the AIG CEO talking about the agentic underwriting and claims process that's being coordinated through the ontology. These are all really massive undertakings. We're going deep with our customers and we're having that level of impact. And that's what really is driving us.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and you'll receive a prompt to unmute your line.
Good afternoon, everyone. Hope you can hear me. And I don't know if you're going to be able to see me. But I'm going to start as a follow-up. I'm going to do 3 questions today. Number 1, when AI started, you guys, you have some customers that wanted to do it their way. And what's happening right now with the AI labs getting into enterprises? Like, how many customers understand that value? Or how many are the niche customers that like understand it and are actually advancing faster? But you also have some that are still like just, I don't know, trying with just Anthropic, Gemini, like OpenAI. They all have enterprise solutions now. Alex, you mentioned talent. How easy or hard is actually to get the right engineers to keep being able to incorporate all that to the outcomes that you are looking for? And the second one on defense, because it's where my heart is always, you got a good call out on Maven in the presidential budget request. Maven is one of the 2 pillars for JADC2. Titan is moving to production, and that is amazing news, but this is an election year. How much of that growth depends on that budget being appropriated, and how much you can actually keep growing if we were to see an extended continuing resolution?
Well, the talent question is Palantir is famous for having the best talent over a very long period of time. Look, it's a super competitive environment. I think the whole world wants to either work a Palantir or a lab. The advantage that we have at Palantir is if you come to Palantir, you learn how to build something that is truly unique. And quite frankly, if you want to leave Palantir, you can have any job in the world. And so I think that talent race is going to continue. The thing about being a Palantir is it's a very high pressure, very unique environment where we need people who are willing to do things that are different than anyone else, and where, although we're 9/10 of the world loves us, 1/10 of the world professionally hates us. So someone on your social graph is definitely going to call you up and say, how can you do all this important work in Israel or the Department of War or other places, even though we've powered every administration basically since in existence, not at the scale, obviously. So that's an ongoing thing. I am pretty confident that we will continue to attract and retain some of the best talent in the world. And we're seeing a ramp up in that. I am now personally sitting across recruiting. I'm particularly interested in neurodivergent people of all kind, people who are neurodivergent enough that they get up and come to this country and do important, valuable work. And we see a lot of, and so like we find a lot of our allies have chosen to come to America and chosen to come to Palantir. We like that. But it is an ongoing battle. There really are a couple options in the world that make sense. Palantir is obviously one of them, and we're very, very unique. I would also say the more we produce these numbers and the more we have actual experience on the battlefield and an enterprise, one of the things we're going to do an increasingly frontal job of doing is you can join the startup that probably is not going anywhere. Everyone kind of on the inside knows venture is kind of not doing well. Or you could come to Palantir.
Oh my gosh.
But it is an ongoing, everyday battle. Everybody wants a Palantirian. When we started this, a couple of years ago, I was saying Palantir is the most important degree in the world. The problem for us is it is the most important degree in the world, and everyone knows it now. Thanks also because we got fair coverage and because, we probably are because of our domination here, somewhat undervalued, but people know that we actually are changing the world and we're probably somewhat undervalued. So it's a great place to go. On the defense side, I'll leave it to Sham to talk now that we're doing our,
Yeah, on the defense side, it's been a very active period. It's not just Maven and Titan. There's also the work that we're doing on production across major weapon systems for the department, work around the Sputnik moment right now. So there's a lot going on that one should be pretty excited about. The department's pulling as much of that into 26 as possible. History would suggest, of course, we're going to be in a CR because we've most time and since Palantir's existed, there's always been a CR. So there are certain things that are outside of our control, but I feel very good that the role we're playing, the stakes are very high. What we're providing is existential to actually moving the department forward, and we'll realize that value. On the AI lab side, the enterprise side here, I think one of the privileged positions we live in is at the limits of what the models can do. I think one of the challenges for the labs is that all they see are the limitless potential, as opposed to living at the edge of where does it translate into economic value. And you see that when I wish everyone the best with building out deploy code, but it's essentially how do I take Palantir and try to replicate that? What we do is very unique based on how we've organized ourselves and the tension between FD and product development. We have these out-of-body experiences. There's at least 2 labs we can think about where they were talking about 2 different customers that they're working with and how it's transformed X or Y. Yeah, it did in AIP. We did that. So I
just add to that point. The best thing that can happen to this country, to this company, and maybe this country is, of course, they should go out and flirt with all this slop. Mostly they come home to Palantir. They don't have to all come home to Palantir. We have limits. But go test it out. Go see how easy. They're creating the market for us. We saw the same.
Is the guy going to
easy
come
it
in?
is to make these things work. Great. And then compare what you're delivering to what we've delivered. And you know what? My version is we don't have to have all the market. We can only we are at our limit doing 100% this year, which I am going to drive the company to, and maybe we can do 100% next year in the US. You know, that's all we can do, you know, and they can just expose the market to their beautiful, shiny appearances. And we'll just expose the market to how we will transform your enterprise. That's how it's going to go down. And by the way, I'm always telling people inside the company, everybody wants to be you. You just may not know it. They're all trying to do Polyco, Stoico, this co. It's because in the end of the day, they need to have growth with profit. But you can't have profit if you're not changing the dynamics of the partner you work with, meaning your customer. It is downstream from the value you create. And that's how Palantir is. We're very comfortable in that zone. Now, I do think this is we're going to end up with a different term for software. You can't lump what we're doing. We're really providing infrastructure and the installation of AI infrastructure. Look, if your company is largely running around and offering steak dinners with something that someone can, you know, hack and rebuild in a week, yes, you're going to have a huge problem.
I don't know.
That don't make sense. They're under huge pressure. And that's one of the reasons we're at the forefront. I mean, can you believe we're at the forefront of almost every discussion in the world? And it's simply because we're powering almost everything that works. Not everything. There's some other great companies out there. Many of them are not well known and we should help publicize them, but that's where we're at. And that's what these numbers show. You don't have to believe us. Believe your non-lying eyes.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Well, to individual investors and Palantirians who are also individual investors, being on the front line of important things is painful. You get yelled at occasionally. Many of the people yelling at you have no clue what they're saying. Some of the people do have a clue what they're saying and just disagree with the West being strong and more efficient and more moral and having better unit economics, or quite frankly, are value your support and we value your defense of us. We are defending you every day. And that's in great part what drives these results. And we are having some fun doing it too, just so you know. And hopefully you'll have some fun. Thank you for your support. And we will see you next quarter.
Thank you. That concludes Q&A for.
I would actually like to know, like, what percentage of this call was missed. Like, it seemed like a lot of useful stuff was cut out. Yeah, someone's definitely getting fired. Well, it's hard because if the mixer, like if all the mics are plugged into one, like studio mixer, and then somehow the connection there or something is messed up, any mic is not going to work. So I don't think it's all the mics. It's just the system that it's plugging into, or so, I don't know. Yeah, it's probably something like 8%. 8% of the call was probably gone. I cannot wait to see what that transcript looks like. What are you thinking about Palantir, not the mics? Well, it's like I said before the call wrapped up, the quarter was phenomenal. Okay, I think that they do important work. The only thing that I really disagreed with Alex Karp is he said that all of our customers are asking us for cheaper and cheaper models, and they don't care to use the top end models. It's like, that is so opposite of what I've been seeing in the market. Kimi K2 is extremely cheap. There's a lot of really cheap models, and no one seems to use them. You know, a lot of the actual, like, you can use the older models of ChatGPT. You don't have to use 5.5. You can use 5.3, and the cost, the amount of tokens that you end up burning, so much lower, and no one uses it. People always go to the top because you're going to actually see it's more price performant, even though the price is much higher. That the output of those higher end models are much, much more worth it. So yeah, that is, I didn't really agree with that. And I think that, but even that's a small part to their overall point, you know. They're getting more customers. Those customers are doing well. Grab is up 0.8%. That is such a great screenshot. This right here. Oh man. Hey, can you use this, please? But whenever your earnings are so baller, you need 3 mics to capture the heat. Yeah, or you know, it wasn't coming through. You probably don't need the best for the routine stuff. Yeah, but that's already the case. Like the frontier model producers already do that. You know, for recurring tasks, you don't need ChatGPT 5.5. But whenever you're producing new code, you're adding new commitments, you're using the frontier models. That's what the market's doing right now. Chad is good people. He's great. Chad's great. ChatGPT is dog poop. And I'm not even trying to be rude or anything. WMC, you're just not following the market. Like Codex is in the lead right now. Anthropic obviously took a major lead, and they might end up holding up a really good lead. But there was a big step change between ChatGPT 5.4 and ChatGPT 5.5. This recent model was trained on Grace Blackwell. The price performance increase that they saw there, and Codex, it's great. And then value for your money, because ChatGPT has reset tokens so many times, people are actually getting a ton for their money right now. Lol, Codex. See, this is what I'm talking about. You don't even know what you're talking about. You're caught up in the last month, and you haven't checked in on the last week. I'm talking about like the rate here right now. I'm not talking about 3 weeks ago. 3 weeks ago, all Claude all day. Right here, right now, Codex is doing some amazing things, and they're gaining market share. Don't say I didn't warn you. Don't say I didn't warn you. Gemini is way better than ChatGPT. Okay, well, you're not even in the running, brother. Yeah, I'm talking more for the coding agents. I'm talking Claude Code versus Codex. Okay. Now he's trolling. Well, I'm pretty sure if it's all, you use like anti-gravity, don't you? I'm pretty sure you're on the Gemini train. Does Codex have a CLI like Claude Code? See that? Do you think they have a CLI? Of course they have a CLI. Okay. But, ladies and gentlemen, that's it from me. I will... you can pump Codex and GPT, but it doesn't change the fact that the valuation on Palantir is ridiculous and fundamentals. And fundamentally, it will be a short. Yeah, I mean, we're talking about two different things. But you can short Palantir. I'm not a shareholder or have anything to gain from pitching Palantir. But I do think that the company is very strong. Okay, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But until next time, bye for now.